Good night, viewers. Welcome to another episode of Hot Topics. In today's video, our live stream, I should say, we'll discuss about current issues in the stock market, the latest developments, and we'll look at some stocks and some insights into companies. So I'm waiting on Ruan. He'll join shortly, but in the meanwhile, I have two guests with me right now, Mr. Thompson and Miss Jodian Aris. Could you guys just tell the audience a little about yourself? Starting with the lady.
Sure. Hi, everyone. So I'm Jodian Aris. I work in research. I've worked in research ever since I started working. So that's have been my area of focus. Started out mainly in terms of economic research from a government perspective. And then I switched over to investment banking, doing research in terms of that aspect of or that field. I That's why I guess.
All right, good evening, everyone. So I'm Thompson. I work at GK Capital Management Limited, and I work in the investment management department as well as trading. So, pretty much we manage the investments of institutional clients and so forth, and then also engage in trading securities both locally as well as globally. Consisting of but not limited to your stocks, your bonds, your CDs, your repos, and etc. So in a nutshell, that's me.
Yes, yeah. I realize I'm having some a little everything. But in the mean, what the market and the international market for the foreseeable future into next year? I'm still here, but I'm gonna probably cannot have
Okay. I didn't clearly hear your question though. If you could go again, or if Andre heard it and could repeat.
Yeah, I actually didn't hear, so it best if you could repeat it, Lance. Lance, you there? Well, I think most I heard was economic landscape.
You guys hear me, sir?
Yeah, I think I hear you a little bit.
All right. So what I was saying that I was looking into what are your outlook for the markets in the foreseeable future, local and international.
Okay, all right. I guess I'll go first. So I guess just to begin locally, right now, everybody's feeling the stock market pretty much since the COVID pandemic, it's declined. We have started off with the pandemic, and then high inflation next.
One moment. I'm here not anyone something about what?
It's gone?
Yeah, yes.
I think I slide. Right. I think it's gone. It's gone.
Okay, all right.
Oh no, it's still there.
Oh. Checking my again. It's come out. All right.
Check, check, check. Hello, is that better now? Yeah, am I echoing? Well, Lance is speaking, but you're muted.
Yeah, speak. You can speak now.
Okay, yes, I think that's better now. So where was that? So pretty much everything would have pretty much been dragging down the stock market since the first COVID case landed on our shores. Where we are today, we're down. I think around almost 10% or approximately 10% year to date, and that's pretty much being driven by high inflation. I guess my outlook for the local market is that rates are likely to remain somewhat elevated, but I believe that going into 2024, we might see some accommodation in terms of maybe a pullback in terms of rate. But granted, it'd be my opinion that I believe that rates will still, we won't immediately go back to that 50 basis points overnight policy rate that we've been used to prior to the pandemic. Um, so against this backdrop, other markets, will seem to find favor with various types of investors. So, the fixed income market, the treasury market, the money market. Um, I believe you might continue to see a lot of action in those markets, especially from institutional players that are essentially, looking for attractive risk-adjusted returns. With respect to the international market, I guess it's the general consensus amongst many Wall Street analysts that they're expecting some rate cuts next year. By now, at the end of the year, I think the Fed has pretty much indicated that they may have one more rate hike before the end of the year. They had a meeting today. They pretty much decided to hold rates steady. Granted that this is true, I think that would probably give some support to the U.S. stock market. With respect to their economy has been doing well. So I think that has contributed to the strong performance of stocks, U.S. stocks year to date. So pretty much now the main challenge, U.S. inflation has come down a lot, and this is essentially impacting their markets. It guides the Fed funds rate. Inflation has come down a lot, but since recently we've seen where oil prices has gone up. So it's a space that we will have to continue to monitor because if oil price is pretty much entrenched in the global economy, so high oil price directly translating to high inflation. So that's a space to watch. So pretty much that's my brief view of the markets.
Okay, that's a good summary. What I notice is that the U.S. market, when I'm looking at the various like S&P 500, the technology stocks, the ETFs, I realize that they're up over 35%, S&P 500 and the technology stocks, while the Jamaica market is still struggling. And that's one of the things that I notice. And even when I look at the unit trust in Jamaica, I see that most of the unit trusts they are down to here. The only one I see that's doing pretty well right now is the international equity unit trust. So the local market is pretty much getting a beating right now. Ruan, do you have any input? Are you and could you just introduce yourself to the audience?
Good night, everyone. Good night. You hearing me quite well, Lance?
Yeah, I'm hearing you.
Oh, okay. So basically, I don't have any much to say. Now. Remember last time I was here, I told you guys that interest rate was going 5%. I didn't expect it to go so fast, over 5% in the period I saw it. I don't see in the next 21 months or 30 months. I'm looking at the markets and the data's coming in. I don't see anywhere where the Fed is gonna cut rates. The reason why you still have strong growth in job markets across the markets, especially in the US. If you're looking at US data, the job market in the US is strong because what? During COVID and the disequilibrium in the market where the Fed went and pumped money into the market, there was a lot of companies that have excess cash on their balance sheet and excess income, where you have the savings rate increased. So I think it was the last quarter you're seeing really and truly where the savings of the US population, or even in Europe as well. Europe as well, you will see that you're seeing the savings of the public market where individuals and economies are actually stabilizing back to normal before pre-pandemic levels. So that's what's caused the excess spending and where you see the stock market growing. And even in the US, you will see that mostly are a top 20 percentile technology stocks that were booming. Many were lagging. So I don't see much of one more rate hike to cut for the inflation. Inflation has gone down, but it's not to the level where the Fed expects it. So I guess it'll be elevated for a period of time. As what Andre was saying. So you have to watch the ratios in the inflation and all that before they can say that things has normalized. But US hike in the interest rate also pushed the US dollar to historic levels. And if you think about it, most persons don't want to put their money in developing markets. They rather keep it in the safe US dollars. So that as well has pushed the dollar up and causing reals across the nations to go up. So yeah.
Yeah, I think just to add, is me echoing now? Oh, just to add, we talk about inflation and that has been in some ways dipping, but I think a lot of that has been because of energy. And if you're watching energy now, it seems as though there's upward movement. So you could actually see a reversal in some of that that sort of optimism that came to market with inflation dipping. So from my perspective, I'd be in agreement that the interest rate is really key in terms of what will play out in terms of equities market, both local and abroad. But I think I am not as optimistic as market in terms of how it is that they expect to see the cuts happening into 2024. So I think if you look at general market consensus, it has been more of expecting cuts or easing to start probably in second quarter of next year. But I think each time the Fed speaks, you find that that kind of gets pushed back a little bit further. So in terms of where market consensus is expecting a rate cut now is pushing a little bit further down the line in 2024. And it's not until we start to see a easing that you'll see probably a little bit better performance, particularly for local equities, because our rates locally, hinges on what happens on the international market. So that factors really watching that rate to see, when it is that you can anticipate that there'll be some, a little bit more optimism or positivity in the equities.
Okay, thanks for your response. So I noted what you said. So you said like the local market and is pretty much following the overseas market, but there still seem to be like a divergence when it comes to like the stock market and the economy, because as right, U.S. stock market is rebounding to some extent, but in terms of the Jamaican market, you see any relationship with the economy and the stock market, Jodian?
Well, our market is not as information sensitive as you would see in like a US. So, leading up to announcements and information being released in the US, there's normally movement in stock prices. Our market is not as intertwined in terms of the releases. I think ours play up more in terms of persons actually starting to see it in terms of their own personal conditions changing. It's how it probably relates in our markets. I guess you'd say it's a little less efficient in terms of the passing through our information. So it's not like, BOJ makes a movement, yes, but it's not like in anticipation of the movement, you're going to see something happen on our local market, or after the movement, right away, you'll see something happening. And it is good for investors because it then allows you a little extra time to get in because information passes through a little slower. But in terms of what you'd probably want to see, similar to what you have in a US market, we're not there as yet. So there's not as great a link in terms of economic releases and economic information and that passing through but it does feed through in much more of a lag way. So you'd see in terms of once it is that things are doing well, in an economic sense, that you would find that persons are probably pumping a little bit more because businesses are doing better and it starts to reflect. So it's a little bit more lagged for us locally.
Yeah, just to add to that, I agree with Jordan. I think locally the majority of our investors are probably more reactive, whereas the US market, it's their investment landscape is so vast and dynamic. They are essentially more proactive than us. I think also with respect to the stock market, if you compare the US stock market to our own, ours is very illiquid. So I find that there for various needs, people will always need cash, regardless of the performance of stocks or the economy. You have different purposes, and I mean, when you have an alternative, in the form of fixed income, that's especially attractive to institutional investors that are managing billions in capital and essentially have to manage their risk. They give them, the alternative, higher rates on CDs, treasury bills, corporate bonds, and global bonds, your sovereign bonds, and all the works. You find that you pretty much have to be selling, so you end up selling down some stocks, and essentially that kind of drives down the performance of the stock market sometimes. So, as I said, the US market is, I think, the liquidity of both markets is a factor to consider in terms of the performance of both markets against within the context of an improving economy.
Noted. Yeah, pretty much. What you said what is pretty much is in line with what I'm already thinking. Ruan, in core connection, do you see in long term performance, like long term in terms of long term now. So let's say the last 50 years, the US economy has grown at a astronomical level. Do you see how it relates in the stock market, or it's just comes down to the basic of business building and using technology to the advancement, and then it translates into building wealth?
I mean, everything hinges on interest rate. So I don't know if I understand what you're asking, but the unprecedented, the amount of spending, the type of yield that you are seeing where interest rate were going on in the last 8 years or so, even a decade out, you're not gonna see that in the future going forward. So the aspect of how funding, because at the end of the day, the capital markets dictates how the economy will grow because of the economy, the capitalist structure of the society itself. And when money is cheap, there tend to be a lot of innovation, development, and a lot of risk taking. And when money is not cheap, as it is not going to be cheap in the foreseeable future, we don't know how long until when, but at these current interest rates, most investors are not going to have a risk appetite as they had 10 years ago. And on that basis, we can't expect the type of growth that we saw the last decade going forward. Hence, there may be different aspects to it on which we're talking about if we're talking about industry growth, etc. And we know technology will continue to grow. We know innovations will continue. But in general, equilibrium of things, we can't expect the same return risk premium as we saw in the past. I hope I answered the question.
Yeah, well, you answer your question. Um, Pretty much. So, in terms of industries, what industries do you guys are like the top industry now? Which industry are you looking the most look like to buy stocks right now? Like which industry you're watching keenly, whether local or international? Andrew,
All right, so I guess to begin, I mean, at the end of the day, I guess I'll begin internationally. Um, based on the trend that we're seeing in our tech is the innovative sector, and it's the one that's kind of leading the advancement. The advancement in technology essentially benefits all industries in terms of all their the operations and just the efficiency of it. Tech has been booming, from .com going into where we are today. In most recent times would have been the advent of artificial intelligence is pretty much still a budding space. We're kind of watching it to see where it's going. Wall Street has essentially, you're seeing the confidence that Wall Street has put into AI, evidenced by the performance of Nvidia stock, for example, which is in terms of chip making that's used in that technology. So in that space, I think I definitely believe I kind of have my eyes focused on tech. I guess to a lesser extent, somewhat have some eyes in terms of consumer discretionary, buoyed by relatively vibrant consumer spending. So those pretty much for the international space. I think those would be the two industries that I'm pretty much keeping my eyes on. Locally, every day we hear about the number of rooms that's on the horizon to be added to the tourism industry. So it goes without saying that in terms of Jamaica, the tourism space, a key contributor to our overall GDP. That's the space that I would say that I'm watching. To a lesser extent, I want to see how the banks will perform. You have some banks that are essentially benefiting during this time, this high interest rate time. I think Scotia is definitely one that has been benefiting, largely driven by their cheaper cost of capital. I mean, evidence through the deposits and so forth. While some others are not faring so well, like that have essentially taken a hit with respect to when you look at their gains on securities trading and things like that. Those that have a higher cost of capital and cost of funding, and essentially you're seeing like your net interest margins contract. So I'm just watching the banking space to see, when there will be a recovery. We're seeing happenings in this space, dividends being halted and then push for dividends to start being repaid, and we're hearing about APOs, capital injections in line with capital adequacy. So I'm watching that space. But I'm definitely liking tourism. Looking forward to seeing that industry continue to recover and ultimately continue to display a positive trend going forward.
Jody, any industries you really liking right
So,
now?
so I think generally as a safe betting type of person, I stick with safer things, the staples. But outside of that, I'd also agree in terms of tech. I think the AI space, and even to a greater or to some extent as well, when it is that you look at probably stuff in biotech that look more on terms of pharmaceuticals and development in that space could also be something that is growing. And I'll also think of things in tech in terms of like home technology. When you think of more of at home and smart homes and that sort of at home entertainment and convenience, I think those are areas that are building out. So I'd say some similar things that they could take a position in now that you think will have growth potential going forward, and what will be in demand or would be in need going forward. But in terms of, I'll still, probably overweight a little bit in terms of the safer things, which are like, more of the staples.
Okay. Ruan, I know Ruan you like Berkshire. You always talk about Berkshire. Why you like Berkshire as a company like that?
I mean, what's not here to like about Berkshire? The insurance business is very a strong business in these times. The exposure to the banking sector, as Andre has alluded to, where you have banks like Bank of America who have access to cheaper cost of capital because of the asset base, the deposit base. They're able to earn a higher yield and interest because of the higher interest rates and all that. So what that's the like about Berkshire, they have a good footing there. Their balance sheet is very strong. Last time I looked at it, it was about $150 billion and all that. So they're doing well, but in general, it depends on how you're thinking about the asset classes. If you're an individual investor, I would say you rather be industry agnostic and look for where you can find companies with strong earnings, good free cash flow yield, and all those aspects tech could be a good one because their operating capital they need to operate is much cheaper than investing in, say, in a Walmart. So because you want companies that are able to provide you with a high return on capital based upon the differential between the cost of capital and the money they make and the capital they employ. So you want to look for those strong businesses. But if you're looking at the construction of portfolio as an institutional investor, you have to look at financials and the staples like retail, Costco in Jamaica, the Bank of Nova Scotia and NCB and all that. So yeah.
Yeah, thank you very much. So, outside Berkshire, which other which other stock you're watching? You have any other stock you're watching? The top three you're watching.
So you're asking for my top three. So basically, I really like what do they call it again? I know I like Coca Cola. That's one I like. Bank of America. I like NCB for sure. I like Berkshire Hathaway. I just say it. I like Canadian Pacific Railway. I know they merged recently, so I'm looking at the holding company that operates the railway industry and all the freight and all that. I'm looking at JP Morgan Chase. Those companies that I know have strong balance sheet and have strong operating free cash flow.
Andre, thanks, Ruan. Andre, what three companies you're watching?
All right, so let me give um I'll give one US company and two Jamaican companies. On the US space, I'm watching Meta. The dominance in terms of social media, the new release of Threads platform, essentially to compete with Twitter. Since recently they made a push more efficiency. We've heard of layoffs and all of that. And then ultimately it all boils down to to advertising revenue. So pretty much I'm watching Meta in that space. See where the stock would have. I believe it fell. It dipped below 200 today. It's pretty much it's a little bit above $300 to go. So definitely we're at the end of Q3. It will almost be earnings season. So that's definitely one stock that I'm looking at since the last earnings that they started posting. Locally, I am watching Trans Jamaica. Essentially, they announced the acquisition of Jamaica infrastructure operators, and management gave guidance saying operating expenses are essentially forecast to be cut in half, and so said so done based on the earnings that would have seen. Recently, I think essentially, they'd have generated much of what they would have done for most of an entire financial year last year. They would have been doing that in a quarter. The bottom line has grown quite attractively. The stock price has reflected that. The price has moved from, I believe, was like 150, and then today we're here, it's at like 260. They have the right of first refusal with respect to the recently opened Maypen to Williamsfield extension at the highway. So based in terms of the outlook, should they take up the opportunity to own and operate that aspect of the toll, that would be that's likely to be more and more earnings in a higher increase in net profits. And then also, the price has run up. I think no dividend stocks. I think ultimately the day will come when dividend stocks are, should interest rates fall. Dividend stocks, and I mean, in terms of the tax rate, dividend is taxed at 15% as opposed to fixed income, which is 25%. So prior to the recent run up in price, Trans Jamaica boasted an attractive dividend yield above around 6 to 7% there. Both given the increase in profitability, I am eager to see, what the new dividend will look like. They declare once a year. I think they meet on the 26th. I would want to see what that dividend per share will be and what that translates in terms of a dividend yield. Lastly, Jamaica broilers. I guess that's my pick in terms of consumer staple. We love chicken. It's inelastic in demand. You know, regardless of market conditions, I think we look forward to our stew peas and rice and peas and so forth on Sunday. So I mean, it's reflected in the when you look at the segment breakout in terms of earnings. The Jamaican operation continues to do well, buoyed by the rebounding tourism industry, and as well as the U.S. operation, which is essentially driving much of the growth that we see. So it's trading at a fair valuation of around 8 times. Profits doing very well. So those would be my three: JBG, Meta, and TransJamaica.
Yeah. Yeah. Three good choices. The meta trades though, I don't know if that would work out.
Well, Meta is trading really cheap in the land. I think it's saying six times.
The trades, I'm just looking at the trades, what they launched recently.
Yeah, I remember when they just announced Threads, they were boasting, 100 and, what was it, 50 million users over a short period of time. And then today, people saying, who still use Threads? But you know how these things are. These things really take time. So they might be, I guess it's like IPO shoot, it probably
But
fall, and then over time, the real trend.
if you read,
Well,
Trade was a edge. Trade was like a edge innovation within the Meta system. I don't think about 5 programmers to develop the system and they integrate it with the Instagram system. So there is not much cost of capital when it comes on to those development.
Mhm.
So it will affect their free cash flow that much. And
Yeah.
they're trading really cheap. 6
Mhm.
times they have a big multiple compression because of the metaverse risk that they took on, but it never worked out. So most investors fled the stock.
The stock. Yeah, I think they were, pretty much confused by the push for the metaverse. I'd want to say maybe, Mark Zuckerberg and team haven't essentially benched it, but they probably shifted the focus to kind of increase investor sentiment towards the stock. And then the entire platform that they're offering, you kind of see where they're integrated.
It's too expensive.
You muted, Ruan.
So the metaverse system, the hardware infrastructure is too expensive for the common person to obtain. So their push for it was too early. The innovation was too early. It's a brilliant idea, but it was too early based upon the cost of cap for the individual to use the metaverse and all that. It was too much of an expense. So innovation never adapted.
Yeah, I think over time, it's similar. Like certain things will just make sense over time as we trend along.
okay. Thanks so much. Jody, your top three. Yeah.
Yeah. So, all right. So when you said stocks to watch, meaning that I'm looking and expecting something good from them, or just
Yeah,
things
it
that I'm
could
looking at?
be. Well, yeah, it could be that you're watching and I say, all right, this company. I'm wondering if, like, based on some development or some views, you say, all right, like something that pique your interest, like that could like might lead you to consider like if you would want to trade those stuff in the future.
No, I don't have any of those that I'm watching to say I'm considering. I think probably just my headspace at present. I think if anything, I look in local markets. I want to see in terms of something that I want to see is really how these companies that intend to the APO are going to fare out. I think that is probably where for me my curiosity is in terms of the space that's going to facilitate this sort of capital injection for them. But not so much in terms of I am looking. I don't really particularly have stock picks. It's something that I don't try. I try not to do. Yeah, but I think, as I said, for me personally, I'm very on the safe side. So if I'm seeking from me, then I'm picking safe stuff that, probably give me some sort of dividend yield or things that are blue chip in nature. Not so much in terms of things that could give a little bit more in terms of our growth trajectory type of growth stocks from my end. But in terms of something that I'm watching in the local space is really the APOs to see how those companies that kind of give indication that they're planning to do something like that are going to play out and how well they will do.
So I think about NCB APO, like the proposed at APO. What you think? What you think about it? You think it's something that NCB really need, or they wanted to bolster their capital for the banking side? What do you think for the Basel III?
Well, I think from my space is really the funding portion of it, in terms of, the buying that they will get. I think if you look at who currently has it, is a lot of large players. So a lot of the same mutual funds that you're talking to earlier are really a big holders of the company. So is it that they are going to be going in a little bit more, considering that it has been a hang for them? That I'm thinking of. But in terms of the financial space, you do see quite a bit of companies that are trying to do that capital injection, which is somewhat abnormal based on the kind of environment that we are in. So it's not weird to see that they'd want to do the capital injection. I think for me, it's just in terms of where it is that that will come, and if we do have something like that, and it takes up so much of the capital, there are other companies that have indicated or want to raise or to come to market or to do other things. That sort of capital that will be remaining for them.
Okay, thanks very much.
I guess my little 2 cents on that pending transaction. It's a big raise. I can say that much. You hear people a little, talk on the street, say, you know, could it be to make room for, some strategic investor to come on board or things like that? But I know there's definitely questions to see if, if the market alone could absorb that entire capital raise of what was it, 20 billion thereabout. I mean, if you're looking at the trend of how NCB has traded, the stock has mostly, decline has mostly been declining. When it hit 100, people say it can't go any lower. 90, same thing. Today we're at 65. So I think that's a reflection of they haven't been paying dividends. So amidst all of that, could the entire market, especially given current conditions, reflected in the stock market, can this stock absorb 22 billion APO? So that's why saying to make room for a strategic investor. It could always be key top 10 key large investors not having a problem injecting additional capital, but I guess that's just the discussions that are ongoing. That's happening in this space.
Yeah. Yes, so yeah, pretty much a lot of complaints is being made against NCB for dividends. I noticed it over here, man. Like everyone is just complaining about dividends. Only the big investors, as I say. But I'm not sure if it's not a concern for me, like dividends. Because sometimes a company can reinvest their dividends and make money, but I realize that local investors tend to look more for their dividends. Your thoughts about that, Ruan?
um I want to be careful what I sister, but basically most investors are not understanding the fact that they are dividend investors. I understand that, but if a company can return higher than what the market would actually give it for a dollar, so for instance, you have a dollar in a company retained, and the company creates a market capitalization of more than that dollar. So they give you 1.5 for the dollar, you have 50% return. If you look at NCB, over the years, it has delivered on the capital retained in the company. I understand most persons are saying it's a big company, but the bank is lifting up its capital adequacy ratio. It's not prudent, and based upon the operation that the company is in, the insurance arm and all that, it wouldn't be prudent for them to pay dividend. I wouldn't buy the stock if they're paying dividend. No, that would make sense based upon the type of economic environment it is in. Persons are worried that NCB might go saying it's a risky company. It will create a systemic risk for Jamaica because it's the largest bank by capital market capitalization. So most of the things that persons talk about NCB is just illogical to me. But let's just watch and see. The $20 billion, I think, is once you leave the bank adequacy ratio and for acquisitions. That's what I believe. But let's see how it goes.
Thanks very much. So pretty much we have a good overview of the local markets. Nobody asked any questions so far, so that one really look pretty much the local market. But like in terms of BRICS now, like what do you see for the like next the long term for the BRICS and the US dollar? Where do you see BRICS having an impact on the US dollar as a current world reserve status? Anyone want to go first?
All right, so where we're at today, the US accounts for pretty much around 80% of international trade payments and so forth, and it's the reserve currency of the world. I believe if BRICS were to have any significant impact to the US dollar's dominance globally, it would take a while. It would definitely take a while. There's a lot of things that would have to happen in the background, and I believe that one of the reasons why the conversation, I think over the years, it's not the first time this conversation would have occurred, because a lot of people would say why or currency have to be impacted by the dollar and rate. I think right now it's pretty much the Fed has been increasing interest rates. So what happens is that the debt denominated in US dollars essentially become more costly to service. So that's why the conversation has resurfaced, and also I think it's also impacted by tensions between BRICS members being Russia as well as China. So my 2 cents on the matter is I think it will take a while. And then I think, remarks, I think it was South African BRICS ambassador. I think he mentioned that the intent is not really to replace the dollar, but essentially to provide an alternative. Because they would, a lot perception would be that the dollar is sometimes used for political means and things like that. So that's why essentially people want to kind of reduce their reliance on the dollar. But I think it take a lot of institutional work, like a central bank that's shares the same standards and ideals as BRICS members, and then that currency or whatever they would want to develop, if it's linked to their respective currencies, I think you'd have to assess the liquidity of those currencies, and the liquidity would ultimately be dependent on the trading in terms of participants within BRICS as well as across the world. We know China is definitely a good player in terms of they're essentially the largest exporter in the world, and their GDP is essentially very high. But long story short, it's one to watch, but I don't think any meaningful impact would happen over the short term or over the medium term, but more the long term. That's just my 2 cents.
Okay, thanks very much. Any addition, Ruan or Joe?
For me, I don't think there is any immediate considerations. I think similarly that it is something that's a little bit probably a little further out. I don't think in terms of the thought process of the grouping that they're necessarily put full thought to it. So I think if it's something that they start to take serious, just based on how it is that I have seen or exposure to how it is that when China developed the mind against something or on something, they actively work towards it. But I don't think in terms of the concept space as it is now, that is something that is necessarily on the considerations for them for implementation. In terms of even doing a currency right now. So for me, based on the current climate or what we're hearing or understanding from now, it seems far way out. But that could change once it is that they do come together and decide that this is something that they want to do. I know that they'll go at it, particularly from China, how it is that we have seen them approach things that they want to achieve. and how it is that they go at it. If it is that they get to that space, then there could be a lot of energy thrown behind something like that. But I don't think currently we are at that space where they are aggressively looking to do something in terms of a currency and a currency that would be replacing the dollar.
Mr. Orator.
Yeah, thanks very much, Ruan. Yeah, so guys pretty much answered like those most of the questions like I wanted to address. I will put my own twist to it in near future, maybe with some videos and some re-edits. But I haven't seen any question in the comment section. So yeah. So guys, it was good having you here for another live stream. Thanks for passing through, and I look forward to see what will happen in the market. Uh, as I say, the stock market is done locally, but we'll see what happens, and I'll look at the strategies that we could implement as investors, whether mean fixed income or otherwise. But guys, thank you for your participation. So
Thanks for having me. Ransom, great discussions.
All right, thank you for having me, Lance.
Thanks.
Nice to meet you guys again.
Yeah, man, big up.
Bye, bye, everyone.
bye. Take care.